Welcome to the final results for NWF Group. This is for the full year ending 31st of May 2017. We're very pleased with these results. We've delivered growth in each of our three divisions. We've completed the strategic investment in our agriculture division. And thirdly, we've delivered results in line with market expectations, which has meant record earnings per share and a record dividend. Then turn to the key numbers. Revenue up 19% to 556 million. That's as a consequence of the increased activity in each of the divisions, increased commodity prices, and also the full year benefit of acquisitions. The key number for us is the headline profit before tax. That's 8.5 million. Very much a game of two halves here, where in the first half of the year we're behind the prior year, and then we've had a strong second half that resulted in profit being up 2.4% to 8.5 million, which is the highest the group's delivered. That converts into a record earnings per share at 14 pence. Net debt's increased to 13 million. Still a comfortable level, it only represents 1 times EBITDA. And it's up 3.1 million in spite of spending 5.2 million on development capital in the year. We're therefore recommending a record full year dividend of 6 pence per share. That's up 5% on prior year and will give a yield on the current share price of just over 4%. If I now turn to each of the divisions and start with feeds, the picture at the top there is our Longtown site. That's a site where we've more than doubled the capacity for manufacturing feed, and Longtown's at the top of the M6, just close to the Scottish border, so logistically a really good location. And that state-of-the-art facility can now produce over 150,000 tonnes of feed each year. Number of moving parts in the market, so we've had milk prices recovering, milk production volume is still lower, but critically the feed volumes pretty stable, just up 1.5%, and you can see our volumes in the same period up 1.6%, in line with the market. Profit down at 1.5 million, that was all in the first half, and it's been a consequence of chasing those commodity price increases we've seen during the year, and it's now at sustainable levels. Then move on to food, and the picture you can see on the slide there is actually from one of our ads in the Grocer magazine as we're looking to win new business. In the year, the Wardle site has been full, it's been operating efficiently, service levels at 99.7%, and critically activity levels, that's the number of loads we do each day, up 6%. So very strong result from the group, delivering £3 million of operating profit, up 11% on prior year. And then on fuels, at the half year we talked about the fact that the team had a goal of over 500 million litres in the year. Really pleased to report they achieved that. 530 million litres for the full year, up 8%. And again, strong profit performance, up 15% to 4.5 million. And that's in spite of warm weather, reducing the demand for heating oil by about 10%. We offset that with more sales of gas oil, more sales of road diesel, and also strong performances from the cold starts that we have down in the southeast. That's Home Counties Fuels and Martlet Fuels, which have delivered over 30 million litres in the year. If we then turn to the group development strategy, the chart at the bottom of the page shows the long-term track record of the group, delivering consistently improved profitability. And we've delivered expectations and exceeded them over the last 5 years. And what we're trying to do is do what we say we'll do, but do it just a little bit better and just a little bit quicker. Critically, we've got a diversified source of earnings from the three divisions, so we can have outperformance in one that could offset underperformance in another. We generate cash. If we don't find things to spend development capital on, we'd look to generate about 2 to 3 million of net cash per annum. We've got a solid track record, but we have an ambitious board. And this is the key thing we're always trying to get across, the balance between safe, reliable, robust, but also ambition and dynamism. So that's what we're looking to develop. The result of that, therefore, is to deliver an increase in shareholder return. We then just turn to the three divisions in feeds. You see on a map there the three principal sites that we have in the UK now. So in the north, the Midlands and the south, very much aligned to where the farming customers are. Each dot on that map is actually an individual farm we deliver to. So that's a really strong operational platform that we've set up for the future. So we can further consolidate this market and utilise that operational platform, and we can also increase the products and services we're supplying to our farming customers. We'll then move into food, another ad from the grocer, 100% commitment. And this is actually to generate additional business to fill the Wardle site, which we plan to do by the end of 2018. In addition, the shot at the bottom of the page shows our pallet line operation in Cheshire. That's where we're distributing individual pallets on a series of rigid vehicles around Cheshire. And we believe there are opportunities to expand this business and expand further, potentially to the south and east of our existing operations. If we then turn to fuels and the development strategy, on the map I've shown the delivery area for each of our 19 fuel depots. And you can see that there's actually lots of space for development or lots of opportunity for further consolidation. And this network's been principally built by acquisition. There are still 150 players smaller than us in this area, and it's one we can develop further. And in conclusion, we've had revenue growth in each of our 3 divisions. That's been good and necessary progress, but it's not sufficient. We're ambitious to deliver more. We've got significant financing headroom for investment in growth initiatives, and with regards to Brexit, we've seen no impact on the fundamentals of our markets to date. And at this early stage of the year, we're pleased to report we're currently trading in line with the board's expectations. Thank you very much.